Hello everybody, happy Cinco de Mayo. I thought it'd be important to recap what's happened since my previous video. I perfectly called the sell-off on Tuesday, full day in advance for all of you people out there who have been saying put your calls in real time, not after the fact. That call actually was in advance the night before. You had plenty of time to sell all the way between 11.98 and 12.02. So that being said, I think we may have found a market bottom and we're going to rally to new highs on the year. I say that for a few reasons. First, Terry Laundrie's T-theory keys in on this Cinco de Mayo, and also the fact that we really overextended ourselves on the downside and we failed to take out a new low today. So let's look at a 10-minute chart real quick, or 15-minute chart real quick of the S&P 500 futures. Here you see the triple top indication that I mentioned in my last video. Then we broke down, and this red line signifies the daily trend has turned down. Now that's why I'm a little hesitant to be calling the fact that this may be a low, because the daily trend in the stock market is officially down. We're not going to have the trend turn up on a daily basis until we rally to a new high over the next few days. Not a new high here, but a new high. We come back down and then go back up, just like a normal swing pattern. So let's take a look at what happened today. We had another indication of a quintuple top basically, but it's actually a true double top between these two levels, indicated again by another deep red bar. So I was short right after the 38.2% breach between the two tops. Yes, I was short right around 1169.75. I thought 1170 might hold. Anyway, it didn't. So I shorted there, and then the 200% projection of the double top called the low of the day, along with this declining bottoms line, which if I go to a 30-minute chart, you'll see. This declining bottoms line, which is actually valid, called the low of the day by about within 6 ticks. So that coupled with the 200% made me get long right there around 55.50 this morning. Now zooming into a 5-minute chart, we can see that we had a break to new highs here after a 25% correction. Let me go to 1-minute chart. You'll see it a little bit better. Okay. Bottoms occur in two ways. There's a very quick movement to a shallow retracement, typically at 25 or 38.2, and then a break to new highs. That's why this morning I thought the trend had already turned up. The second way, which is what happened later in the day, is when we have a very deep retracement but a failure to take out a new low. Here we had a perfect 87.5. So let's look at early in the day. Long here, add on the break of the 25% retracement here. Then the perfectly called projection I got out at, which I believe came in at 1172.75. Yes, this 1173 was the high of the day. So I reversed short here, but on this indication right there, I got long again. I thought we were going to go to new highs and challenge the 1175 to 1177 range, which was where the market spent a lot of time working yesterday, and I assumed a lot of stops accumulated up there. But again, I was thinking instead of trading. What did happen is the market came back down on this big red bar and had a perfect 61.8, 1169.75. What I noticed after the fact that I didn't get out in time was that this ended up being an intra-range double top. So people who bought, like me right here, they had their stops accumulated up there if they reversed and sold. So the market likes to screw people, and that's what it did today. So anyway, I stayed long during this whole mess, but I got stopped out here when the swing sell activated. Then I saw the 87.5 hold, still looking for a low today because of the time cycle indicated by Terry Laundrie, so I bought the 87.5. Then this little range had a deep retracement, and we broke to new highs toward the end of the day. So now, I believe, for all those people asking me to give you trades in real time, I believe that you can be long and strong in this market with stops below 1154, looking to take out today's high because there's a 90% probability that the high or low of the previous day will be taken out. I believe we'll be taking out 1173. If I go back to a 5-minute chart, we can take a look at where this projection comes in. And we can see that the 127.2 and 100% both indicate those areas that I mentioned earlier, the 75 to 77 range, where the market probably has a lot of stops. I'm not looking to sell all these levels. I'm looking to see a continuation to new highs on the year. Now, real quick, I know the video is a little long and I'm not doing a great job today. I want to show you the euro. This is a 60-minute chart of the euro. I want to go to a 90-minute chart and show you where the low came from today. If you can see on the 90-minute chart, there's this declining bottoms line. The declining bottoms line links from the gap opening the prior two major lows that occurred on the chart. It perfectly called the low today. The euro is in a trending down pattern, so I'm hesitant to say, hey, the low is in, but I do believe that after this significant move down of almost 1,000 pips, we should be looking for some sort of bounce, probably to this area, if not even this area. There's a lot of resistance up here before moving in the next leg lower, which I believe will bring us to about $1.25 or so on the euro. Anyway, just wanted to show that there was a reason for the low today, and I am now a buyer of the euro on any indications, looking to be a seller up in this range, and maybe even up in this range if we have a deep, deep retracement. Anyway, that's a quick recap of today, Cinco de Mayo. I'm going to start drinking now, so hope everybody else is too. Have a lot of fun. Have a good night.